I just came back from running a few miles, and the first thing on my mind was y'all. Make sure I don't have that white stuff on my lips. Is y'all, thinking about stocks. It's Stock Tip Tuesday, and we're gonna talk about the Apple split. But I can't give y'all a video like this. I'm gonna go shower, and I'll be right back. Just give me 2 seconds. 2 seconds. I'm still not ready. That's much better. Hello, my future rich friends. Welcome back to another Millennial in Debt video. If you are new here, please hit the subscription button below and turn on that notification bell so you get every single time I upload a video. All right, so like the title suggests, we're going to be talking about this Apple stock split and has got the world in a tizzy. What it means for you, should you invest, all these great things, because it is Stock Tip Tuesday. I actually might upload this before Tuesday, but you could just watch it on Tuesday. Or any day you want, actually. So what Apple is doing is a 4-1 split. This is nothing new in the Apple world and Apple territory. This is actually their fifth stock split since their company has started being a public company. And the last stock split they did was in 2014, where they did a 7-1 split. So what they're doing now is a 4-1 split. So what does that mean? That means if you have one share of Apple that you bought for $400, because it is trading at about $400, $425, depending on when you watch this video, who knows, right? So if you have one share, on August 31st, what's going to happen to that one share is it is now going to be 4 shares. So from your one share, you will now have 4 shares. However, each of those shares that you now have is no longer going to be worth $400. They're not going to be worth what you paid for. What they're going to be worth now is about $100. Now, does that mean you're losing money? No. Does that mean you're gaining money? No. All it means is instead of having one share worth $400, you now have 4 shares still worth $400, because each of those individual shares is now $100. Now, why is Apple doing this? So we're going to do a little bit of math and a little bit of stock talk, and if you're confused already, please hit the link above or the links in the description box to watch my Stock Tip Tuesday series, where I walk you through investing in beginner-friendly terms and all of these things so that you can really understand how to build generational wealth and financial freedom using the stock market. That's my little caveat. Now back into it. So why would Apple do this? Apple is on the S&P 500, which is an index fund, and they're in the Dow Jones Index Fund as well. Dow Jones only has about 30 companies in their index, and you're weighted essentially on how much your shares cost. And since Apple is trading at around $400, they are the heftiest of those 30 companies in the Dow Jones. Follow me so far? That means there's about 10% when you buy that Dow Jones index fund, you are owning about 10% in Apple. Now, same thing with the S&P 500, which is 500 different companies. When you buy S&P 500 index funds, you're getting about 5% Apple shares. Apple, and these are all speculations and people talking and things like that, so Apple has not come out and confirmed any of this. So this is just all ideology that's floating around in the financial world. All right? So because of this, Apple dropping the price of their shares by doing this split puts them at a mid-range instead of being at the top of, the Dow Jones. It puts them at a mid-range, kind of spreads the index fund, right? Because an index fund is supposed to be a nice little, smorgasbord of different companies based off what you're investing in, right? So with this split, Apple would be more even toned instead of being at the forefront, right? The leader of the pack. Another thing, or another speculative idea floating around in the stock market world, is that Apple is splitting so that it can be more consumer friendly for people who are just getting into trading, or it's more accessible, because if I only have $100, I won't be able to buy a $400 Apple share, right? As opposed to if it's $100 and now I'm like, oh my God, I can buy a share in Apple. You know, I will feel better about that purchase. It's the same thing with like buying things on sale, and it's the mentality, right? So yes, when we look at stocks like Amazon and Tesla, we're like, wow, that must be a really good company, must be a profitable company. It's trading at $3,000. It's trading at $1,500 a share. And so, yes, Apple's always been very big on exclusive. They're being exclusive. Their market is always, you know, we're the best out there, but they've always been very consumer friendly. So even though their phones are like $7 million and their laptops are like $20 million, they're always very consumer friendly. With a $100 share, that is more on brand to be consumer friendly. Does it make a difference in how much the company is worth? No. Are you getting more bang for your buck buying it at $100? No, right? It's all kind of like a mental game, okay? With me so far? I think you're with me. I think you're following. I have faith in my future rich friends. Now, what does this mean going forward? So in Q3, which we're currently in right now, Apple has been extremely profitable during the pandemic. They have been doing very well. They have, you know, been gaining in areas that are not usually what their Q3 looks like. Apple is more of a Q4 kind of company, and they're very, you know, up and down, as with most things that you buy, right? Unless you're like a toilet paper salesman or a toothpaste salesman, most stocks are going to go up and down. So that's not something to be worried about. You know, most people investing in Apple aren't concerned that this stock is going to drop drastically, or that this stock is going to, or the company is going to go bankrupt. So yes, you can be prepared for up and down, but it's not something that, if you're trying to invest long term, that you really need to concern yourself about, because Apple is pretty much going to be all right. They're going to be fine. All right. So what's going to happen essentially is an anomaly. They happen all the time in the stock market. And when the stock splits, people are going to be rushing to buy it. It's human nature. And that is probably going to drive the stock price up once they do the split, which again is on August 31st. Does that mean that once you buy it for 100 and it skyrockets to like 150 or 200, that it's like, oh my God, this is amazing? Yes, but it's probably going to go through ebbs and flows, as with all stocks do in all companies. So that is what you can anticipate and expect when they do this particular split at the end of the month. Because, oh my God, we're in August. Now, my last piece of advice or tip, when you are thinking about investing in Apple or whatever investing you're doing, remember that a lot of the companies now are offering fractional shares. So a lot of the reasons that I talked about why Apple might be doing the split don't really, in our modern day 2020 right now, it's not really a big issue, because at Robinhood or Stockpile or other brokers, I can buy fractional shares. So that's something you always want to think about. If you want to own shares in Amazon, you want to own shares in Tesla or Netflix or whatever, and you're just like, man, but they're so expensive, you can invest $50. You can invest $100 and get a fractional share. So you'll get a piece of a share instead of buying just one full share. So that's something you want to keep in mind. Now, to my investors who only really do low-cost index funds, which is what I am shifting more my focus towards in investing. And if you don't know what an index fund is, again, you know, hit that link, right? So what you want to do if you are index funds and you're like, I don't buy individual stocks, that's really not my thing. Like I mentioned, Apple is a part of the S&P 500 index fund. All right, so if you're interested in SPY or other S&P index funds, or if you're into like Dow Jones index funds, those are the things that you might want to focus on in these next few weeks prior to the split. throwing more money in there, right? That if that's, more in line with your flow, more in line with your style, because ain't nothing wrong with index funds. I'm super pro index funds, right? So you can still be part of this conversation and you can invest strategically into index funds as you've been doing, in your investment life, and still keep in mind what's going on with the Apple split. And there you have it. Simple, easy peasy. And thank you for joining me. Also, I tried some new audio. I have a lapel mic right here. So if you like the audio way more on this video, please, please, please hit me in the comments and let me know. Because if not, I could shift back to what I've been doing. Whatever. I do it for y'all. Bye. See you in the next one.